Welcome to Open Views 2024. I'm Pablo Viguera, co-founder of Belvo, and we're thrilled to be here one more year to share with all of you our views on the ecosystem as part of this exciting two-day event. Between today and tomorrow, we'll have the opportunity to listen to leaders from some of the main fintechs, banks, and innovators in the Latin American financial services sector to understand how they are leveraging open finance and the tangible impact it is having on their businesses.
Hello, everyone. This is Tintoré, also co-founder of Belvo. Indeed, we have an exciting lineup of discussions and presentations. We look forward to exploring all these topics with industry leaders from across the region. Let's take a close look at our agenda for the next couple of days. Today, we'll see how to build ethical AI models using open finance data together with FICO. We will then analyze some of the emerging use cases for PIX via open finance in Brazil. Then we'll explore the trends transforming credit and banking with open finance data in Mexico with Citibanamex, Banorte, and Openbank. And we'll close the day discussing about the present and future of recurrent payments in Mexico.
And tomorrow, relevant players from the fundraising and capital markets ecosystem like Valor Capital, Maya Capital, and Nice will explore the current state of funding in Latin America with a special focus on fintech in Brazil. We'll also explore how alternative data in Brazil is already having an impact on credit modeling for companies like Kista, Banco Inter, and PicPay. We'll then turn to Mexico to see how alternative data is emerging as a key resource to increase financial access for unbanked populations. We'll explore this with Clip and Quesky, two leading fintechs. And finally, we'll look in detail at the state of open finance regulation in Colombia with the help of the main regulatory entities in the country.
But before we dive into all these topics, we want to take the opportunity to take a step back to see how the ecosystem has changed in the past years, all the progress that the market has made to come to this point, and finally, the challenges that still lay ahead of us. May 2024 marks Belvo's 5th anniversary. And in these 5 years of building, we've learned some lessons and seen the market take massive shifts. When we started this adventure 5 years ago, we came into a new market that was still nascent. Now we see a fully operational ecosystem with thousands of companies using alternative data sources and new payment methods to serve millions of customers in a better way. Looking back at the last 5 years, we've witnessed tremendous growth and evolution. When we started, open finance was a completely new concept in Latin America, a mere vision of a more inclusive and efficient financial system. Over the years, this vision has turned into reality. The ecosystem has grown and matured, and we have seen a dramatic shift from traditional banking models to more inclusive and data-driven ones that leverage alternative data sources and innovative technologies. We've also seen the emergence of new regulatory frameworks that promote transparency and competition. These regulations have paved the way for open finance, giving consumers more control over their financial data and fostering innovation in the financial services industry. Furthermore, we have seen how open finance has enabled the development of new products and services tailored to the needs of different customer segments. It has allowed for the democratization of financial services, making them more accessible to unbanked and underbanked populations.
As we look towards the future, we believe that open finance will continue to drive innovation in the financial services sector, leading to more personalized, efficient, and inclusive financial offerings. The potential of open finance in the region is immense and still largely untapped. We see a future where open finance will continue to grow and evolve, unlocking new opportunities for businesses and consumers alike. There are still significant segments of the population that are underserved by traditional financial services, representing a massive opportunity for growth. Furthermore, the increasing adoption of digital technologies and the ongoing regulatory developments are creating a conducive environment for the expansion of open finance. And in this time, since we got started 5 years ago, Belvo has grown significantly, expanding our reach and impact across the region. Today, we're proud to work with some of the leading banks and fintechs across LATAM. Thanks to our products, over 40 million people and businesses have already shared their data or initiated payments through Belvo-powered apps. This has opened doors to better financial services and better financial outcomes for millions of people. During this time, we've also expanded the depth and breadth of our product portfolio. From just offering banking data aggregation at the beginning, we now offer specific products aimed at solving different pains for customers across data aggregation, enrichment, and account-to-account payments. Despite our progress and growth, we believe it's still day one in our journey towards providing infrastructure to transform financial services in the region.
And we want to summarize how we saw the market 5 years ago, how it has evolved into today, and what are the things that we envision to see in the upcoming years. Before, when we started Belvo, companies lacked access to data to verify users' income. This led to a high percentage of the population that remained either invisible or considered too risky in the eyes of credit institutions. Even when access to data was available, thanks to the early solutions provided by open finance companies, extracting value from this information was a big challenge, as it was a new source of data, very different from what companies were used to play with. Finally, businesses lacked access to tools that allow them to move money from account to account easily. Now, companies have access to new data sources to assess creditworthiness at scale, both financial and non-financial data. They can perform analysis better and faster, thanks to a new generation of credit models and scores. And account-to-account payments is widely spread as an alternative payment method for single-time payments. Still, some challenges remain to be solved across the market. Collaboration from regulators and banks is necessary to expand access to data and to make it more accessible, scalable, and with better quality. Poor usage of open finance data will impact credit decision, as today we're still in an exploratory phase in the use of open finance data within credit models. And when we look into open finance payments, we're not tapping into what will be the real game changer in the industry: variable recurrent payments through account-to-account rails. Now, let's look into these problems, how we've tackled them over the years, and what will be needed to solve the challenges that remain ahead of us.
So as Uri was mentioning, the first problem to be solved was access to data. Access to financial products has historically been hindered by a system that relied too much on past financial behavior to evaluate applicants. This approach left a significant portion of the population invisible to traditional assessments or trapped where their past activity limited their chances to progress financially. Companies often didn't have access to other available data to understand or better evaluate applicants beyond their limited or dated credit history. In the case of Mexico or Colombia, where the unbanked population is high, individuals without prior credit activity or with a thin credit history were excluded from accessing financial services. Often, this led to people turning to informal financing tools that have high interest rates, thus negatively impacting their chances of improving their financial outcomes. In the case of Brazil, where a larger share of the population is banked and credit is widely spread, high interest rates and the high percentage of people with negative credit scores was another obstacle for them to access more inclusive financial services. Companies also struggled to be able to see beyond this traditional data. By leveraging alternative data sources, such as banking or employment records, Open Finance is able to solve for that and now offers a more comprehensive view of an individual's financial health beyond traditional credit history. Employment data, in particular, has emerged as a core piece for banks and fintech companies alike, providing valuable insights into an individual's income stability over time and earning potential. And knowing the problem at hand, at Belvo, we're tackling this by helping companies safely and easily access transactional data from banks, employment history data, and also fiscal data. To illustrate this, we can turn to Mercado Pago, one of the biggest and fastest growing fintechs in the region. Mercado Pago faced the challenge of customizing its financial products to adapt to the individual needs of its customers. This is particularly true for its customer acquisition and credit line allocation for its new credit card in Mexico. To achieve effective customization in terms of credit lines, it was necessary to categorize users based on their transactional activity and on their income level. This approach not only enhances the customer experience, but also maximizes the effectiveness of credit decisions, thereby driving Mercado Pago's growth and profitability in the market. To allocate credit lines, Mercado Pago relies on models based on each user's ability to pay, such as e-commerce transactions, for example, and on income calculated from employment data provided by Belvo. By integrating employment data into their models, they have seen an average increase of approximately 20% in the assigned credit line amount.
And the second problem to be solved came from companies who lack the tools to turn raw data into insights. Financial institutions need advanced analytic tools and methodologies to extract value from open finance data and build credit models. Traditional credit scoring has heavily relied on bureau data, and it has some shortcomings. Usually outdated 1 to 2 months on average, imprecise in many cases, difficult to explain to end users. Now, with access to open finance data models, we can improve this significantly. But using this new data source becomes a challenge. It is new, complex, and full of nuances that need to be considered to extract all its potential. The key challenge here has been to help companies in translating raw data into actionable insights. We're working to normalize data from multiple sources and make it easier for companies to extract value from it, even helping them to build their own credit scores from scratch. The information that can be shared through open finance goes way beyond credit data. It covers things such as the electricity bills you pay monthly, the income you receive from your salary, pension, investment, or other sources, the subscriptions you pay for your gym membership or Netflix, or the money you save through your savings account. In summary, we're moving away from being able to analyze users with only liability information to be able to use not only liabilities, but also assets, income, expenses, and investments, providing a much deeper analysis on each user and better segmentation capabilities. This gives a much more comprehensive and dynamic view of people's financial journey. And building tools that help companies use all these data has been a challenging endeavor we've had to deal with since we started Belvo. This second problem has been tackled from different angles. First, companies want the easiest to use metrics to plug into credit models. Translating raw open finance data into easy to use credit scores is what any lender needs in order to extract value from open finance in a fast way. And this is why we have built credit scores using our different data sources. Using open finance data in Brazil, we have built, in partnership with FICO, the first AI-based credit score model using solely transactional data. And high-fidelity employment data, together with the explosion of demand of this information in Mexico, has allowed us to build an employment score that is used today by lenders to improve their models with a single metric. Second, the benefit of these tools goes beyond companies who access raw data through Belvo. It also helps companies who have access to transactional data, such as regulated players in Brazil or financial institutions that can leverage the transactional data from their own users within their platforms. These companies are now partnering with open finance players like Belvo to enrich their own data and use existing solutions such as transaction categorization or credit scores to ease their adoption of these new data sources within their businesses. And to show an example, a company like Monet in Colombia has been developing their scoring models solely based on data extracted from open finance with the help of Belvo's enrichment solutions. The results have helped them save over 20% in defaulted loans using the new probabilistic models.
Now looking at the third problem to be solved, companies lack tools to effectively and efficiently move money between bank accounts. Most digital payments in the region were made on top of credit card rails, and these posed some challenges. First of all is cost. The region has some of the highest interchange fees for credit card payments globally. Then, fraud. Mexico and Brazil have some of the highest levels of card payment related fraud. Finally, access. Users not only need a bank account to use these payments, but also access to credit products. In the case of peer-to-peer payments, back then, transfers were still costly, slow, and not really user-friendly. Account-to-account payments came in as a solution. And this has already been massively evolved thanks to the availability of real-time payment rails set up by central banks to allow the transfer of funds, such as PIX in Brazil, SPEI in Mexico, and PSE in Colombia, among others. Regulators have pushed them to be adopted and have incentivized very low costs. During the last years, we've seen tremendous growth in the development and adoption of these new methods that are progressively transforming the payments landscape in Latin America. A relevant case for account-to-account payments growth is obvious, and that's Brazil. In just 3 years, the popular instant payment system, PIX, has become the favorite payment method in the country, surpassing cash and bank transfers in many cases, and quickly overtaking the previously undisputed dominance of credit cards in e-commerce. It has already hit 201 million transactions in one single day. Considering the number of banked individuals in the country, this number indicates more than one transaction per person per day. It's 4 times higher per capita than in India, which has a system, UPI, which was introduced much earlier than PIX. And no wonder the adoption has been so widespread. The benefits of account-to-account payments are crystal clear for merchants and users alike. They are faster, they are cheaper, and they work through bank authentication, hence reducing fraud.
And most of the applications of these payment methods have been applied to single payment use cases, where they're seeing interesting traction. However, the challenge remained for recurrent payments, where users need to perform periodic transfers to people and businesses without the need to be present during the transaction. We've seen that this is the biggest market need and where we expect to see more innovation in the upcoming months and years. Efficient recurrent payments are vital for businesses that operate under a subscription model and for utility providers that charge for services on a monthly basis. These operations require an efficient, reliable system for collecting payments recurrently. And in the lending sector, for example, being able to set up automatic repayments can significantly reduce default rates and improve cash flow. The need for a solution in these areas is driving innovation in the payments sector. In the case of Brazil, we're already working to develop new features that improve PIX capabilities for recurrent payments. This is part of the central bank's agenda. And while the development of automatic PIX has been delayed, Bacen is already releasing other exciting features, such as scheduled PIX that allows users to program single payments in a future date, which helps use cases like lending, where the first repayment can be confirmed at the moment of the loan approval. Recurrent PIX will allow users to schedule recurrent payments in the future for a specific amount. It solves big problems for subscription-based businesses that need to process the same payment amount over and over each month, something that today can only be automated using credit card rails. a much more expensive payment method. And smart transfers, which will allow customers to process variable recurring payments between their bank accounts to promote better personal finance management, also known as me-to-me transfers. Users will be able to freely move money from their account at institution A to their account at institution B, multiple times with a single consent.
And beyond central bank initiatives, we've also seen an opportunity in the market to improve the efficiency of existing payment methods that tackle the challenge of recurring payments, but were not easy to use by companies or are not friendly in terms of UX. At Belvo, we're also focused on exploring how we can enable this today. And this is what we're doing in Mexico, for example, thanks to direct debit. Until now, direct debit was a service only available to some players in the industry. Companies needed to integrate this service through banks at a high cost and operational complexity, oftentimes manually. We've made this service available through our API, and we've allowed companies to operate direct debit in a simple, fast, and automated manner. All of this without the need for lengthy integrations with banks or manual processes such as file sending and reconciliation headaches. We've developed our own network of bank connectivity with direct integrations with Mexico's most relevant banks, ensuring the best settlement times at the highest cost effectiveness. Also, via an API integration, companies can also automatically schedule payment instructions, monitor transactions in real time, and easily manage debit authorizations. This enables them to reduce operational burden and optimize recurrent payment management, eliminating the manual processes that many companies in Mexico still rely on today. So this product combines the main benefits of variable recurring payments. In particular, the user doesn't need to be present to approve every single payment. Instead, through a simple single consent, users can authorize and schedule multiple recurring payments with a simple UX. Also, the cost is smaller than other alternatives and improves operational efficiency as customers only need to do one integration to be able to accept payments from multiple banks. One of the most relevant use cases we've seen for this product so far is credit collections. Ensuring that individuals have the proper means to make payments conveniently and promptly. If individuals cannot repay their credit due to a lack of suitable payment methods or other financial difficulties, efforts to include them in the financial system will definitely not endure. Efficient collection is also crucial for the profitability of lenders. Belvo simplifies the collection process thanks to an improved direct debit experience. This allows lenders to collect and to effectively pull payments automatically directly from customers' connected bank accounts. As a result, transaction costs are reduced and default rates are lowered, improving profitability and operational efficiency. To highlight this, let's turn over to one of our customers, Rayo. With almost 11 years of trajectory, Rayo has experienced and expanded fast growth from its birth in Costa Rica to reach Colombia and Mexico. Their mission remains unchanged: to offer instant loans to solve urgent needs of their clients. And in Mexico, they have experienced a 20% growth in collection volumes thanks to their use of our direct debit product.
So this was a good summary of how we see the industry today. Now, how do the next years look like for open finance in Latin America? What are the most important challenges that need to be solved to keep growing this opportunity to democratize access to financial services more and more within the region? 3 things are key for the industry. First, collaboration from regulators and banks to expand access to data. We need to build data access solutions with collaboration from the data sources, financial institutions. This market cannot succeed if the supply side, data sources, is not actively involved. We have seen the benefits of regulated access to banking data in Brazil, and we need stronger collaboration to ensure high-quality financial data can be accessed in a secure and scalable way across Latin America. Second, broader usage of open finance data will redefine credit decisions. Today, there are many cases of financial institutions sitting on top of open finance data without really leveraging its full potential. Putting credit models in production at scale using alternative data sources is still an objective, more than a reality for most of the biggest players in the region. Building these models and optimizing the use of this data is a massive endeavor where we will see a lot of technology development in the upcoming years. Finally, variable recurrent payment solutions will be built on top of account-to-account rails. Products focused on securely moving money recurrently require a different set of features that still need to be built, where regulation, financial institutions, and new players can collaborate to develop a gigantic market opportunity. So after witnessing the first 5 years of growth of the open finance market in Latin America, we're more excited than ever to see the potential of the upcoming years ahead. These first years have taught us and the market many lessons. And using these learnings is equipping businesses with much more powerful solutions to effectively use data and move money in faster, cheaper, and more secure ways to keep broadening the reach of financial services in the region, leading to an improvement of economic activity and life quality across Latin America.
So thanks a lot for joining us. We hope you enjoy the rest of OpenViews 2024. And with that, we'd like to pass it over to the real protagonists of OpenViews, the builders, the doers, and the innovators. So sit back, and we hope you enjoy the event.
Thank you.